let's look at calculating state income tax for Virginia. We're gonna make a fictitious salary of $100,000, and we're gonna look at what would the Virginia state taxes look like and how can you use this to calculate your state taxes for your specific example. Make sure you have your tax tables up for the Virginia tax table so we can use those to reference as we go through this. So our salary is going to be $100,000. State standard deduction, you look at your tax tables and you look down at the bottom to see what is the standard deduction for someone filing single or married filing joint, depending on what you are doing. I'm going to do filing single in this example. So we are going to have an $8,000 standard deduction. And that means that we are going to have a $92,000 taxable income. So we don't have to pay taxes on $8,000. We do have to pay taxes on the remaining $92,000. That comes straight down here into our taxable income box. So Virginia has 4 tax brackets. So we have a 2%, a 3%, a 5%, and a 5.75%. And you can see that the first one holds $3,000. So the first one has the capacity to hold $3,000. The next one holds $2,000. The next one holds $12,000. And where I'm getting that, I'm just subtracting the two numbers. And really I'm subtracting this one from the previous one because that's what you would have paid taxes on already. So then everything over $17,000 is taxed at 5.75%, which is going to be the majority of people's income living in Virginia because most people would be making over $17,000. If you are under that, so say you are under the poverty line or you're working part-time, then you might owe less in taxes because you'll owe a lower percentage. So the first tax bracket can hold $3,000. That's what this gray box is for. Just how much can it hold? It's less than our taxable income, so we're going to fill up that bracket. We're going to put the full $3,000 in there. And the rate is 2%, which as a decimal is 0.02. So we're going to have $3,000 times 0.02, which is $60. We've paid taxes on that $3,000, so that comes down here. And that means that there's $89,000 left. So 92 minus 3, we get 89. This bracket holds $2,000. And 2 is less than 89, so we're going to put the full amount in there again. And this time we're being taxed at 3%, which is 0.03. And 2,000 times 0.03 is also $60. So $60 in the first bracket, $60 in the second. And we've paid taxes on $2,000. So now there is still $87,000 left to be taxed. The third bracket holds $12,000. And that's still less than 87, so we're gonna put the full 12,000 in there. And this one gets taxed at 5%, so 0.05. So 12,000 times 0.05 is $600. So we fill the first 3 brackets up, and now we're gonna go into the 4th bracket. So $12,000 just had taxes paid on it. So now we have $75,000 left to be taxed. And all remaining money, regardless of what you make, if it's over $17,000, we're gonna pay 5.75% tax on it. So there's no maximum on this bracket. It doesn't fill up. No matter what the amount is, it's going to just go into this bracket. So this is the max, this is the cap bracket. We're gonna put the full amount in there, so 75,000, and we're gonna pay 0.0575 in tax on it, so 5.75%. So 75,000 times 0.0575, $4,312.50. And that's all of our taxes. So we add up these 4, and that is going to be our total state income tax owed. So 60 plus 60 plus 600 plus 4312.50. So we owe a total of $5,032.50. So that comes down here at the bottom.